Hi and welcome to today's post-market show. Today is the 13th of March and let us look at what happened in the markets today. And obviously, if you have seen the markets, there was a major sell-off towards the second half. Who would have thought the 16,000 would be broken so easily after the market opened with a lot of positiveness, and obviously the end was absolutely unexpected for everybody. And to talk about how volatile the day was, from the title of the video you can understand it was in fact a very difficult day. Talking about Nifty, it fell around 350 points from the day's high to the day's low, and talking about Bank Nifty, it again fell around 1000 points from the day's high to the day's low. So things have become again setting on a bearish path for Nifty and Bank Nifty, and hopefully things can change coming in the future days, because we are seeing again the US market has shown some positiveness. They are trading in the green right now as we speak, and we will be looking at obviously let us into the charts, and let's start with Nifty for now, and then we will move into the other important shares and how it performed today. So if we go into the Nifty's chart, this is the Nifty's chart, which is shown on the screen. You can see that the market has again on a close to close basis, it's again a red candle for the day. It is almost ending on very close to yesterday's low, or even slightly breaking it. So Nifty closed around 0.16% in the red, falling around 25 points from yesterday's low. But today the markets showed a lot of positiveness. The Japanese market was 2% up when the market opened, and also the Asian markets were also, and Asian and European and US futures were very positive, but then the sell-off came hugely towards the end. So if you look at the 1 hourly chart, and I've been sharing this downward parallel channel since the last couple of videos, and you can see again, and I've clearly mentioned that markets have to end above this downward channel to expect some bullishness in the coming days. But we were expecting something like that. We were expecting an end above 16,000, but the FIIs had a different plan, and the markets have been again dragged down to the level inside the parallel channel. So that is something again to look out for. So as I mentioned, you can keep a track of this downward parallel channel in your charts, and expect things to not look up until this is broken on the upside. This is about Nifty. So talking about Bank Nifty, again a very similar story in Bank Nifty as well. If I open up the 5-minute chart in Bank Nifty, same thing. The markets had opened firmly in the green with a huge gap up. Then there was a slight sell-off, but nothing major. And from there again the markets took resistance around 33,939, which is again an important level which we marked as a resistance in the last day's video. From there the market has fell only on the downside. There was just a one-way movement towards the second half, especially after 1:30. Now 1:30, why is it important? 1:30 p.m. Today Indian Standard Time, the all important State Bank of India results were declared. Now if you look into the charts of 5-minute chart of State Bank of India, you can see that the market just around 1:30 p.m. when the results were announced, the market actually moved up a lot, but from there onwards there was a huge fall in the SBI. So if I mark the day's high to day's low, we will see it fell around almost 8%. So SBI falling 8% obviously sets the Bank Nifty on a very bearish path, and that is exactly what we've seen in Bank Nifty. So the markets have had a huge sell-off towards the end, and that has been reflected in other Nifty and other major indexes as well. So this is Bank Nifty and how the SBI results which were due today, and how it performed. Well, we were discussing that the SBI results could turn around the market, and in the past also we have seen that the SBI results have set the market on a positive path, but this time was an exception. This time things did not happen. So history did not repeat itself this time, and SBI results have actually brought down the markets. So that is something to keep in mind about the coming results, the coming quarters of whenever the results are announced. Going into the results of SBI, it is actually had posted a profit. SBI had posted a year-on-year increase in net profits by 44%, but the street expectation was much higher for SBI. So this is what happens. The markets, the companies come up with good results, but the markets have higher expectation, and if it is not met, the stocks are punished in the secondary markets. That is exactly the fate of SBI today as well. Talking about another result, which was the Tata Motors result, which was announced yesterday. Interestingly, the Tata Motors did not incur any profits, but their loss was reduced, and markets took this as a very positive sign, and the stock has increased almost 8% today. So that is something to keep in mind. So that is something to so as I was saying, that the companies coming up with good results or bad result, it does not matter, but what matters is expecting beating the street expectation. So that was about the results. Now obviously, after the inflation data, we were expecting the markets to have a huge fall, but the markets did not fall right at the open, but the markets fell towards the end. So that is because of the SBI results and FII selling. Obviously, we will be looking into the FII selling figures. But why did the markets not fall today? A possible explanation could be RBI governor coming up with a unscheduled meeting last week, where they decided to increase the repo rate from 4% to 4.4%, an increase of 40 basis point. Maybe that was done to prepare the markets for the bad results, higher inflation results that was announced yesterday evening. So maybe that was the reason the markets did not react so bad to the inflation data. And talking about the other sectoral indexes, Nifty mid cap have interestingly entered in the green, 0.48% in the green. Nifty small cap as well ending in the green. Tata Elxsi is another important stock which gave a breakout today, almost at a 15% breakout. So there is something to look into. And IT and metal indexes are falling. Maybe the IT will pick up because of the positivity in the Nasdaq, which we are seeing in the US markets. But coming to the metals, especially Tata Steel, so the commodity prices are again trading at lower levels in the global markets. Maybe that is causing the metal indexes, the metal stocks to fall. And something interesting as well, the LIC IPO the allotment was finalized today. So people who are expecting to get the allotment, but many people did not get the allotment, and actually they are celebrating, or they are happy that they did not get the allotment, because looking at the things, we can expect LIC to open at a discount, which means people who are expecting listing gains right at the opening day, that will not be happening. In fact, the share price, there is a high chance that it will open at lower than IPO price. So which is interesting, because people who missed out on the opportunity can look into buy the share at a discounted price when it opens up, because fundamentally the LIC is a strong company. So for long-term investment purpose, you may consider buying LIC if it opens lower. And talking about other investments, obviously, as I discussed in the yesterday's show as well, do not chase growth stocks right now. Companies like Zomato have fallen to just 50 rupee levels. So that is the growth stocks are hammered down in the markets, and so the only way to invest your money in the right shares is obviously going for true and tested companies with historically which has been there and has been performing consistently well over the years. Those are the companies you should look for, especially the blue chip companies. That is about the investment ideas. And obviously, do not invest all your money at one go. Go for a staggered investment where you break up your capital into 4 or 5 parts and buy every time the Nifty hits 300 or 400 points lower. So that is the idea. So talking about FII, DII activities, let's get into the screen and look at the FII, DII activities. So as you can see that the FIIs have again continued their selling streak, selling up around 3,780 crores today. Not surprised at all. And DII have again tried to support the market by buying 3,169 crores. So this is the data of FII DII selling activities. And if you look at the USD-INR is still at again at a very weak level. So that is around 77.4 is the USD-INR levels right now. So this has to come down for the Indian markets to gain more positivity. Otherwise, if you look at the crude oil prices, it is trading around $110, which is again not a good sign for the Indian markets, as India is a crude oil importing country. So this is the crude oil data. Talking about the VIX in the US, it has again fallen off around 6.42%, and it is now below 30. So US VIX coming down is again a good thing for the markets, because all the global markets follow the US markets very closely. And if we look at India VIX, it has finally come down today, falling around 3.2% on a closing basis, which is good. Now looking into the US indexes, right now here the US markets are open, and we can see that the Nasdaq, S&P 500, DJI are trading in the green. But right now as we speak, we can see again the markets are falling. But Nasdaq is well in the green, 3.6% in the green. At one point of time it was even higher. And so if you look into the daily charts of these indexes, you'll get to see an interesting thing. So this is the daily candle of Dow Jones, and you can see a hammer candle forming at the end of a downtrend. Now this is again a textbook technical analysis, where after a downward trend, if we have a hammer candle and the next day we see a gap up and the markets have closed in the green, we can expect the market has bottomed out, and it will go up further in the coming days. Now obviously this will not work 100% of the time, but most of the time it around 60 to 75% of the time this does work. So let's see how the US market ends, because today it has to end in green and firmly in the green. Otherwise we will say that this is a fake breakout. So something like this happened over here as well, but after showing positivity for 2 days, the market again fell. So maybe waiting for a couple of days would be a better idea to see how the market reacts, and then taking positions would be a good idea. The same with Nasdaq. You see it's again has formed a hammer candle. It's not that prominent, but it is more prominent in the DJI and S&P 500 as well. So this is something to look out for in the US market, because if that is trading in the green, we can expect some positiveness to spill over to the world markets. Especially India market is in much need for some kind of positivity. Hopefully that can come in the coming days, because most of the important data announcement like inflation data and others have been announced already, and also the major stocks, the quarterly results are out, most of them, and in the coming days there are not much data to be discussed, and hopefully the markets can stabilize somewhere here unless and until there is more selling by the FIIs. So this is something to look out for. So let us see how the US markets ends today, and obviously if it ends in the green, we can expect the markets to open up with a positive bias on Monday. So today's the end for US market is very important. So how it ends, let us discuss that on the Sunday live stream session, where we discuss about the important things to look ahead for the next week, the important levels for the week, and if any important news has been announced over the weekend, we shall be incorporate that in the show as well. So that is the idea. So I hope to see you in the Sunday live session, and that is all from my side for today's show. I'll end it here, and thank you so much for watching.